So, markets started the week with a little bit of drama, a little bit of politics, and somehow fresh all-time highs. Hey everyone, it's Tuesday morning, January 13th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. U.S. stocks pushed to new records even as investors digested growing concerns around Federal Reserve independence. By the closing bell, the Dow Jones Industrial Average was up 0.2%, the Standard & Poor's 500 also gained 0.2%, and the Nasdaq added 0.3%, all finishing at new all-time highs. What's interesting is how the day actually started. Stocks opened sharply lower, but by late morning, buyers stepped back in and completely flipped the script. It was another reminder that right now, dips are still getting bought. Under the surface, though, not everything looked calm. Gold and silver surged to record levels as investors moved toward safer havens. Bonds slipped and the U.S. dollar weakened, signaling some nervousness despite those equity highs. A big reason for that tension was the news around Federal Reserve Chair Jerome Powell. He confirmed that the Justice Department has subpoenaed the Fed, raising the possibility of criminal charges related to testimony about building renovations. Powell didn't hold back, calling this an escalation of President Trump's efforts to pressure the Fed into cutting interest rates. He said the accusations were pretexts and emphasized that rate decisions are based on what's best for the public, not political demands. In corporate news, financial stocks had a rough day. Bank shares fell after President Trump warned credit card issuers that they would be violating the law if interest rates are not capped at 10%. One major lender dropped about 7%. With other large banks also moving lower, just as earnings season for U.S. banks is about to begin. Looking ahead, investors are now focused on inflation data. The December Consumer Price Index report is due today, and markets are largely pricing in no interest rate cut from the Fed this month. That follows last week's jobs report, which showed a cooling labor market, but nothing pointing to a sharp economic slowdown. So yes, stocks are at records, but underneath the surface, uncertainty is clearly building. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.